Good evening, everyone, and welcome to Admiral Markets webinar of 10th of September 2014. My name is Nenad, and today I will talk a little bit about scammers in Forex market. Forex is full of scammers, really, and to know how to spot a Forex scam, you need to know a little bit about scammers' history, then modern scammers, and how to protect yourself. So today we will have a relaxed webinar without GBP dollar, without Euro dollar, without any currencies. We will leave that for tomorrow and of course Monday. And today a relaxed webinar. So spotting a Forex scam, how to spot a scammer. Before I begin, there is a disclaimer stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions in any other detail, please visit www.admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but a globally used .com website. Forex is risky business, and this is a personal opinion only. This webinar is informational and educational purposes only. So with having said that, we are ready to proceed. So, historical Forex scams, regulations, modern Forex scams, and how to protect yourselves. So today let's talk about and let's start about historical Forex scams. So as you all know, today Forex market usually trades, well, we can say it's over 1 trillion per day. So if you combine that with currency options, which do exist, and we will talk about it in one of next webinars, currency options, binary options, futures contracts, and the amounts which Forex trading really has, it can go to couple of trillions traded per day. So it's usually in between 1 trillion and 5 trillion per day. It depends. Course. It depends on liquidity of all markets which are involved in Forex, and we need to take into account futures contracts. Now, let's say we go a little bit in the history, and in the 2009, Foreign Exchange Committee, which was at the Bank of International Settlements, estimated the total numbers which back in 2009 were 3.2 trillion. With this type of money, which was floating around unregulated spot market, Forex scams can only increase because the lures of earning fortunes can be very, very promising. You know, usually when we talk about Forex, back in days, I'm talking about 2000, 2005, 6, even 2007. Those were the days that many countries really didn't and never heard about Forex. And you know, when you say Forex, many of them thought that was a scam. And well, the thing is, yeah, the Forex itself is not a scam. Forex does exist. Forex is a little bit regulated just by some rules, but it's not regulated as stock market, of course. It's over-the-counter market. And the thing is that many of the old popular scams which were present back in days, in 2000s, they just do not exist today. Because CFTC, which stands for Commodity Futures Trading Commission, and the National Futures Association, NFA, just basically killed most of those popular scams. The first scam which we were encountered with was the old Forex scam, which was known as bid-ask spreads. So the point spread between the bid and ask basically reflects the commission of a back and forth transaction which was processed through the broker. Now, these spreads typically were different between currency pairs. Now, the scam occurs when those point spreads widely differ among brokers. So brokers they didn't basically offer a 2-point or 3-point spread in euro dollar, but spreads which were 7 pips or more. Now, if you multiply that with every 1 million trade, you can see how good that was for those scammer brokers. So the thing is, that kind of scam which was present, and fortunately now when I started to trade, basically the first time I have encountered something similar. But the thing is, it was not just about euro dollar. The first broker which I was personally introduced to offered good spreads, pretty good spreads on euro dollar, but on other currency pairs those spreads were just enormous, and you couldn't basically trade anything but euro dollar. And now you see, so spreads which were 7 pips, 8 pips, 10, 12 pips, those were the signs of a bad broker. Now today that kind of scam has quieted down basically over the last 10 years. I remember spread on GBP dollar was also 7, 8 pips. That was not normal. But we need to know that brokers, mostly brokers in USA, they were very problematic. So CFTC, NFA, and other nations which do regulations basically should be aware of that. So now the thing is, these kind of tendencies, I can say, they still exist, but the thing is they disappear momentarily with the money when confronted with actions. So there were many many of them were jailed, and the thing is, majority violators have historically been in United States companies. So usually we in Europe don't have to worry about, but we still need to be careful. Of course, I know that we all trade with other markets which is completely regulated, but the thing is, I need to warn you, because you don't know what can happen if you, I don't know, false promises. Maybe some of your friends will tell you go to this broker, I don't know, whatever. But the thing is, you can be scammed. Even though, as I said, that kind of scams they were killed during last 10 years, but still they do exist. Stop hunts also. I need to say, stop hunts were really problematic back in days. I remember trading, I was trading GBP dollar, I can remember, and suddenly there was a spike, and then, well, everything back to normal. Okay, if we see a normal spike, that can be caused by a rumor or something like that. But if you see that the price is very close to your stop loss, and then it gets spiked and it gets down, that is a sign of a stop hunt. Now, not particularly your stop was counted, but probably your stop was placed where majority of stops were placed. So usually when that counts, the price proceeds to kill all of those stops which have been collected above that particular price. So you can imagine that today your GBP was at 61.50. That level was broken, and suddenly in a couple of minutes it went to 61.70. Now that was a normal stop triggering. That was basically it's called stop triggering, where all stops above this level were particularly triggered, and it spiked up the price to 61.70. But if you see that the price is at 61.45 and then suddenly it spikes to hit your stop loss and proceeds down, something is not okay. I know that Admiral Markets never did that, but other brokers did that. And I personally witnessed a few times when I was monitoring some trades back in my trading days, there were some brokers which executed stop hunts. And then the thing, what happened, the thing was basically there were some expert advisors which were hiding your stop loss from the brokers. But the thing is, you particularly, as one single, I know, man, woman trader, one single trader, you're not interested to those kind of brokers. They usually spike those stops which are mutually placed. So basically, if you have a pool, as I said, at around 61.50, and many traders placed a little bit above 61.50, that can be a stop loss hunt. Now a few comments. Do you believe that the new spread can be 20 more pips? Some brokers, I know Oanda is a USA regulated broker. They do widen the spreads during the news, but the thing is, I don't, Admiral Markets just doesn't do that. So yes, you ask me if I believe that the news spread can be 20 more pips. I was a witness a few times when I traded for I was trading on Oanda, but not my account. It was basically mutual account for some people who live in USA. And the thing is, yeah, that was a 20 pip spread during the news. So Oanda does that. Vagante is saying that was with Admiral Markets. No, stop hunt, Admiral just doesn't do stop hunts. Many times, basically, my stop loss was missed by 0.3 pips. So I can really witness that Admiral Market never ever did stop hunt. At least what I trade and last couple of years, they never did that really. So yeah, but you need to know you should not misplace a stop hunt for a stop triggering. Stop hunt is when you know how to see a stop hunt. Yeah, price move, that is okay. If you see that price moves, let's say around 61.50, then if it's not about the brokers, it's about your it's about trader stop loss. Every stop which was hit while the market was going up, it will add more momentum to the upside. Stop hunt is something different. If the price is 61.45 and in a second it hits 61.50, sorry, that was it. In a second it hits 61.50 and then gets back down. That is stop hunt. But I can really say that Admiral Markets is fully regulated. It never did that. But I need to tell you, for other brokers, guys, if you want to trade with other brokers, please be very careful. As I know, that won't be the thing with Admiral. Pro accounts and standard accounts, they just do not have that. Pro account is of course better because of spreads, but the thing is, stop hunt is the thing of the past usually. Those were historical forex scams. Miracle systems, guys. Now you probably know about all of those miracle systems which basically did exist back in time. Miracle systems. Buy $97 system from many I cannot say those names now, but the thing is, I personally know that there are some marketeers which use basically couple of names and were hiding behind those names. They were trying to sell each stupid nonsense system for $97, and they were using different names. Now, for of course the sake of this webinar, I cannot say those names, but I know who were those. I just know how did they do those kind of scam. It was basically invest $97 in their system, and then what will happen, you will make a fortune. Do you really believe, guys, that if you buy a system for $97 that you will make fortune? Back in days, that was a well-known scam, and that was particularly happening in the year 2008 to 2011. They are basically running some miraculous systems which can give you many good profits. But you know, when you open their account statements, there were no normal account statements in the form of HTML. Now listen to what I'm saying. The only valid statement is my FX book live account statement. You can go with Trade Explorer on Forex Factory and your personal HTML. Right-click account, save history, and place it on desktop. Now, what did they do? They basically offered their live account statements through PDFs. It's very easy to manipulate your account statement into PDF, because all you have to do is you need to convert it to Word, and then you change the numbers, and then you save it back to PDF. Guys, don't fall for that. That was also one of popular scams. I need to tell you, each of my clients can see my statement, and I also put one of my accounts there on Forex Factory to see how I trade, basically, how I don't have anything to hide, so basically everything is visible. But the thing is, if you see that I know your mentor or your seller want you to give you a PDF form of account statement, I am 100% sure that was false one. Okay, PDF statements, just listen to what I'm saying. PDF statements are a lie. You never ever take any of those PDF statements for your approval. It is a complete lie. Now, those miracle $97 systems were promised to give you a fortune, and then they, let's say, they show you $1,000 or $100,000 account, and basically led you to believe that that was a real price. That was basically a real account which was traded. That is false. So you never should ever fall for that one. Spreads which were not clearly stated also were one of those scams. So I remember that back in time that basically spreads were on their website. There was a saying, okay, we have 1 to 2 pip spread. When you open a real account, then you have 3 or 4 pip spread. So if you see that spreads are not clearly stated, do not fall for that. That is also one of scams. It's a marketing scam which is meant to lead you to believe that those spreads which were basically advertised on the website are real. Now today we have basically ECN brokers, and we have all very good spreads, but in the year of 2008 that wasn't the case. Also to 2008, 9, 10, many of those brokers were just hiding the spreads because they didn't get a good liquidity from their providers to give you competitive spreads. Promises of high profits also. There is also one of those scams. Usually it will lead you to believe that you can make abnormally high profits with Forex Market. The thing is, they like to call you on your telephone and you just don't know what Forex is, and they can promise you very high profits, and then you're led to believe that if you trade Forex Market you will be rich in a matter of days. That is not the true promise of high profits. It's just a marketing trick which will lead many traders to believe that they can easily make profits from Forex Market. That is not the case, because Forex market is all about, tripod of successful trading, and it depends how much you have invested. If you trade with $1,000 and you make 3%, guys, it's great, but it's not that big sum of money, right? It's only 3% of 1,000. It's like $30, right? But if you trade 10,000, that's 300, yeah. If you trade 1 million, then basically it's a lot more. So I'm talking about high profits. High profits are only fixed, and they are fixed by the percentage, basically ROE, return of investment, how much you have gained during, I know, one period of time. That is how you can make high profits. If you make 3% on $100 account each month for 6 months, you're a good trader. But the thing is, you will not be rich. So this was very false statement. So that was a historical Forex scam, and that was a very false statement. Then those bucket shops, really, the term bucket shop also, it refers to a fraudulent brokerage firm that employs aggressive sales tactics to try to sell the, let's say, Forex market it owns, and wants to get rid of, I don't know, of good informed clients, because good informed clients will never fall for a bucket shop. So no one will say to you, we run a bucket shop. But many Forex brokerages are just bucket shops. They will take your trade order, but they will never actually place it on the open Forex market. They sit on it, place it in a proverbial bucket, which is where the term comes from. So based on real exchange numbers, and in some cases fabricated numbers, they will tell you whether you made or lost money on the trade after the fact, without giving you access to real-time market data. Those are bucket shops. These brokers pay out a little from time to time just to show them that they are legitimate, but for the most part they will keep the profits for themselves. Now, those kind of brokers do exist. Of course, historically they were in much higher numbers, but thanks to CFTC, and NFA, they basically are really now, they exist but in smaller numbers. So thanks to CFTC, really. And the thing is, real market data, Vagantes, you can do it. Believe me, Admiral is very honest broker. You don't need to check anything. But real market data is given to you through real ECN competitive spreads. If you open an account which is more than $1,000 with Admiral, you will have great spreads and even better executions. So the thing is, you can also go on Forex live charts. You can go because many different Forex brokerages use different liquidity providers. But if the company is fully regulated, you don't need to be afraid of anything. Admiral Markets is a fully regulated broker, and they have offices in 25 different countries. And I need to say, getting a license, FSA, from UK is it's hard to impossible. And Admiral Markets basically Admiral Markets firm got the license from UK. So that was when the firm has a license in UK, you don't have anything to worry about, because that is one of hardest licenses to get. Generally, you can go I don't know, on Forex Street and compare the price. They will usually go with a 4 pip difference, but if you open Forex Street live price data or Forex live Forex stream, you can see how market is going through various liquidity providers. But various brokerage firms will have various spreads. So I need to say, you need to know basically what you're trading. Admiral Market, M trading is perfectly fine. I'm not allowed to say anything about M trading, but the thing I can say, you can trust M trading. That is enough for you. And it is enough for me, because I'm not, now still I'm not allowed to tell you about M trading still, but the only thing for M trading, I can say you can fully trust it, 100%, believe me. From these things I know of, they're completely great. So don't worry about M trading. As you know, M trading is a partner of Almirall Markets. That way, it's pretty, very secure. Promises of high profits. I was telling you about that. So guys, if you come up with idea to make high profits in Forex market, high profits are profits which are usually more than 3,000, 5,000 per month. You need to have a good account. Now, if you have account, I will repeat it again because I see that some people were late. If you have account of $100 and you made only $3, that's good because you made 3%. You can make same 3% on $1 million account if you know how to trade. Yes, you must have a high account. That is okay then. Promises of high profits. Don't believe for that, but tell them, yes, if I have a big account, then I will be able to make a high profit if I am a good trader, right? Bucket shops. I was telling you about bucket shops. So that term was constantly used and it's still used in the Forex world. And basically, many of those bucket shops cease to exist due to CFTC regulations and NFA regulations. Now, regulations which basically exist in Forex market are CFTC, NFA, then CSEC or CCEC, Federal Financial Supervisory Authority, FFSA, Australian Securities and Investment Commissions, ASIC, Swiss Financial Market Supervisory Authority, it's SFMSA, then FSA, Financial Services Agency, then FIRA, Financial Industry Regulatory Authority, and of course US Securities and Exchange Commissions. Now let me tell you just a little bit about those regulations. As you know, the Forex market is decentralized market. It does not have a central exchange such as stock market. And it operates with let's say, it doesn't have a central exchange or clearinghouse. In order to regulate the market, there are several governmental and independent supervisory bodies. We can call them agencies, but they are basically formal bodies around the world, such as NFA, CFTC, as I say, ASICs, all of them which I previously stated. Now, let's say if I remember correctly, 1974, the Congress, US Congress, created CFTC as an independent agency with a mandate to regulate commodity futures and option markets in the United States. Now, the agency mandate has been renewed and expanded several times since then. In December 2000, when Congress passed the Commodity Futures Modernization Act of 2000, basically CFTC developed a regulatory agency just for single stock futures, and it began in 2002. Then basically after that time, I think it was in 98, CFTC created basically NFA, and NFA also created an online access to the Background Affiliation Status Information Center, BASIC. So BASIC, now listen to this, BASIC, it provides current and historical registration information disciplinary actions of all current and former CFTC registrants. So when you pay, I can say, when you pay a penalty to NFA, it will be a big penalty. And many of those famous brokers, I remember back in time, I just cannot speak the names of those brokers. Unfortunately, you can find it on the internet. Some of those big broker names actually suffered penalties from NFA, and those penalties were huge. I need to say one more regulatory agency. It's called MiFID, and basically MiFID was adopted in the year of April 2004, and the thing, its aim was to improve the competitiveness of European Union financial markets and it was created for a single purpose. It was meant to create a single market for investment services and activities, and assuring a higher degree of protection for investors in financial instruments. So MIFID, we call it MIFID, you can call it MIFID, whatever. The thing is, it's a regulatory agency in the European Union, regulatory body in European Union. Now, that was about regulations. When you see all of those regulations are basically very hard to get. This is very hard to get. Financial Service Agency, FSA, license in United Kingdom. That is what other markets have in United Kingdom. MiFID regulates in the European Union. Cyprus is I can say SCEC, but the thing is Cyprus regulation is the easiest to get. FFCA is also good regulation, but those two regulatory bodies are for United States, FTC and NFA. Remember that, for US citizens. For our European Union, MiFID is enough. We have also Cyprus and Financial Services Agency, which operates in United Kingdom. Now, modern Forex scams now involve not just $97 systems, which basically are the thing of the past usually. Now we have other things. It's miracle softwares. Now there are many promises about false softwares which will basically give you a complete understanding of Forex market for you. The thing is, if you go through a Google search, you will see there will be many software sellers that will tell you, yeah, buy this software. This software is great. Some companies out there are selling their special packages for more than $10,000 and $15,000, and in many times it turns out to be something that you can find on internet for free. I know that because I was witness of one website which was selling. I think it was involved in some sort of Forex trading package. And the thing is, they were selling their products for more than $15,000, guys. That's impossible. And the thing is, many of those indicators which were customized by them, you can find it for free. So it is generally not advisable to buy any type of Forex software that will tell you which trades to make, because human mind is ultimately what matters. And human mind can make the money. Software can make you money for some time, that it can basically go into a losing spree and maybe margin call your account. Also, empty promises of high profits. Again, basically, I always remind you and all of you traders the risks involved in Forex trading. That is good thing, because good brokers will always have risk disclosure statements. Guys, the risk disclosure statements such as these ones, risk disclosure statements. Look how Admiral Markets is covered. Look at this. Everything before each single webinar I do with Admiral Markets, I always stress out risk disclaimer, risk disclaimer, risk disclaimer. So many of those Forex brokers and some webinars for some other Forex brokers, they do not have those kind of things, and that can be very, very tricky. So usually that can be considered as an empty promise, which is of course a scam. If you promise your friend, or I don't know, whoever you want to promise something, if you promise something, then guys, try to respect the promise. I never ever promise anything if I'm not sure I can do it. Promise is a hard word. Promise is a rich word. Promise is something which we have in ourselves. If we promise something, then we should be ready to accomplish it. So empty promises about the money, about various Forex miracle softwares are just empty promises. I need to tell you now about the case which I witnessed a couple of months ago. Basically, it was, I think, some 8 months ago. As you probably know, in each country, even in the country where I currently live in, there are various Forex brokers. And one of my friends who knows what I have been doing went to, I don't know, I can say that it was a cheap course. That course, first of all, that course for Forex Market was very cheap. Very, very cheap. And he fell for that. It was she. She fell for that, and she wanted to see what the Forex Market is. And during the course of the class, their mentor and teacher asked the whole group, what do you think, how much is enough for you to be considered a good Forex trader? And that friend of mine knows, she knows what I was talking about. If you make 3 to 5% consistently each month, you're a good trader. And she instinctively told him, yeah, 5% per month, 5% per month. And then that professor, but I know what that firm is. Of course, I'm not allowed to tell you, but that was another firm which works here in Serbia. That professor just smiled and started to laugh. Only 5%. If you make 5%, then you are not a good trader. If you don't make more than 20%, then you're a bad trader. So he effectively told her that she needs to make 20% each month to be considered a good trader. You know, I don't know what I would do in that case if I were there. I would really like to meet that guy, and I would like to ask him, okay, you think 20 or more percent, give me your account statement. If you're a good trader, show me your account statement. That means that you made more than 300% on a single account in the year. And I will not talk about $100 or $1,000 account, because guys who trade on $100 and $1,000 accounts can also gamble, and they can have a string of luck. Don't tell me that. Show me a real account. Show me a real account and tell me, are you profitable or not? And then my friend came to them after 10 days, and she asked him, okay, I will give you $100,000 if you can promise me that you will make me 20% each month. Because I told her, okay, go to him and ask him, can he promise you, that professor quoted, because he is not a professor, he is a scammer, can he promise you that, I don't know, one of their traders in the firm, or maybe himself, can make you 20% each month? And of course, when she came to that professor, she asked him, and she told him she would give him $100,000 if he each month 20%. Of course, he was a little bit, he was confused, and he told him, he told her, yeah, but I cannot promise you to make you 20%. And of course, then he told her about risks. She never, ever went back to that guy again. And now this was the story, which is a true story. And I can say, guys, don't fall for those kind of promises. That is why you have Chris and me. That is why we are honest with you. And that is why we are here to help you. Everything what I've been talking about with you on these kind of webinars is the truth. I will never ever tell you, go invest $1 million and I will make you 20%, because I'm not making 20%. My average return of investment is in between 3 to 5%, and I'm pretty happy with that, because you know how I trade, you know what I can the thing is, what I can promise is, I can only promise that I will, if I do the trading and if I teach you guys, the only thing which I can promise to you is I will be honest with you. I will try to make 3 to 5%. I will not promise you I will make 3 to 5%. I can tell you my goal is to make 3 to 10%. Maybe there were times when I made, I think it was June this month, when I made almost 7%. It's okay, but my goal is in between 3 and 5%. I can promise you that I will try to work it hard to make it like that. I will never tell you, yeah, 20%, that will be great, give me the money, I will make you 20%. That is an empty promise. Don't fall for that. Suspicious signal sellers, also those kind of things really raise the hair on my head, raise the hair on my head, because modern day scam is really, it's called a signal seller. It's okay if well-known trader, who you know who that is, I was selling the signals, and from time to time, yeah, I do it again, it's okay. But the thing is, usually signal sellers were people who can be a retail firm, pooled asset managers, maybe some managed account company, or individual trader who promises to trade based on their professional recommendations, that again will give you an empty promise and will make you wealthy. The thing is, traders should never ever tell you, with my signals you will make a fortune. If someone tells you he will give you a signal, then ask him how much you earn per month, how much you can make per month, and then you will see if he can make you 3, 5, or maybe 150% per month. And of course, ask for a history, because being profitable 1 or 2 months is nothing. Ask for a history of 6 months, 6 months in a row. So if that history is good, that's okay. 1 year history, whatever, but ask for a history. Now, the thing is, some traders, signal sellers, will recommend you a good trade now and then. But the thing is, many of those signal sellers just cannot give you their history of trading. And because of that, you should stay out of those signal sellers. That was a scam which was also historical scam, but we can say that this is also happening now. Yeah, and I agree with Kalyan. This is ridiculous. Real pros are literally suffering for 5%. Indeed, it's not easy to make 5%. And it's beep if somebody says they can make 20%. Yes, of course, it's BS. You just cannot believe those kind of traders will tell you they will make you 20%. Guys, always have a thing in mind. If bank gives you 3% per year, why wouldn't you be happy with 3% per month? It's 12 times what bank is giving you. For what withdrawals, there were firms which basically would not allow the withdrawal of money from your investor account. Can you enter or exit a trade during an economic announcement that is not in the line with expectations? If you can't withdraw the money, warning signs should flash in your mind. If the trade station does not operate to your liquidity expectations, again, warning signs should flash again. It's very important to consider when choosing a broker or trading system to satisfy your personal goals. So guys, Ponzi schemes, withdrawals, if a firm cannot give you a proper withdrawal, then you should ask whether that is a bucket shop or not. Then again, false systems, do not fall for those false systems. They are still being sold over the internet. False systems and PDFs, do not fall for that. If you want to have a good teacher, then webinars, Skype sessions and material are great thing to have. Then there are still bucket shops, but not so many. And the special thing is all traders, well-known names, I will not now speak of those names, but all traders who definitely don't understand new market conditions. There were famous back in time, there were some good traders back in days, but they just cannot adapt to new market conditions. Trader who was good 10 years ago, maybe it's not good now, because market conditions 10 years ago now are completely changed. So if he's not in this matter, if he forgot about price action, if he is confused about new market conditions, then probably that old trader is just a history name. So always ask for a history of account trading, and you will know if trader is good or not. Now, how to protect yourselves? The first thing is ask for a real account statement. Learn all those simple things which will make your experience better. It's a simple thing. If someone is good, let him show it. Listen to people who know what they have been doing. Again, if he is good, he will show it. Regulation. All those regulations which I was talking about. Try to read. If you're with Admiral, you're safe. If you're trading with other brokers, then check if that regulation exists. History of brokerage, history of the account, history of that guy. My thread on a Forex Factory website, I will tell you, just I need to pause the screen for a brief second. I will open it now. My thread on Forex Factory has gained more than, I need to show you this, you will see this now. It's more than trading discussion. Under trading discussions thread, this is the history. This is the history. Now they removed the visitor number count, but the thing is, Spiders then is having more than 3,500,000 views since the inception. So guys, that kind of history, there are good threads. That is the history of the trading. But that history needs to reflect on the present, because history is history, present is present. But if present is good as history, then you're on good tracks. Good support from your brokers. Does your brokerage give you good support? If it gives you, great. One more thing to consider. Trading history and withdrawal policy. Is withdrawal easy? If it's easy, great. It's great. Now, there are some countries which have some problems with bank accounts. Unfortunately, Serbia is having awful financial policy. Serbia is one of the most I can say backward countries which are still there, do not have regulated financial policy, and because of that sometimes withdrawal policy here in Serbia is completely bad. It's better than it was I don't know 5 years ago, but it's still bad. Financial system and laws in Serbia, those guys who are working there in the ministry, they still don't know what to do. But it's going for a better. I hope there will be young and fresh blood which will turn these things in a positive territory. But I know that some countries do have a bad money policy. Personal experience is always a good thing. Personal experience is always, you need to listen to guys who have good experience with a guy, with a trader, with a firm. And yeah, as Claudio is saying, a corrupt system made only on connections. Indeed, Claudio, corruptions need to be rooted out. When corruption is rooted out, everything will be great. USA, Germany, UK, yeah, those kind of countries are to be listened to. Those kind of countries have regulated monetary policy. If you hide something from their government, you will go in the jail. And corruption in those developed countries are at the minimum. And we know that unfortunately in many countries there are still corruption, and without connections you cannot do anything. Unfortunately, that is what is making our world and some parts of the world. So guys, I hope that you have enjoyed this webinar. We were talking about important things. Trading is not just about selling euro dollar or buying GBP Swissy. Trading is about all these things, about knowing who you trade with, about knowing who you should listen to, and about knowing what to do. If you have any questions, you can ask me. And as you can see, we are very close to the end of the webinar. So if you don't have any further questions, I will assume everything is clear, guys. So yeah, what about diversification of brokers? Vagantas. Well, I can say if you're okay with a broker, you don't need a diversification. You can do that only if you want to protect your money. Let's say if you trade with huge money, and then you can protect yourself. But the thing is, you can do that, but I personally do not. I don't do that at the moment. I'm perfectly happy with Admiral Markets, and you know, it's good at the moment. Of course, I hope it will stay. How can Admiral Markets transfer our account to M Trading? It's a regular procedure. Believe me, it's a regular procedure. Don't worry about Admiral Markets transfer to M Trading. It's regular. It's regular. What is your GBP stop loss, Kalian? I don't know why you're trading GBP. This is the trade which I basically took a breakout retest, and of course my stop loss is always this time is 35 pips. If you ask that, if you have taken that trade, unfortunately that trade is not good. Oh, it's only 13 pips in a loss. But my stop loss, I will tell you if you want to trade, 61.20 is my stop loss. So basically, it's 12 or 13 pips in a drawdown, and that particular trade which I was shown on Trade Explorer is basically 61.50, 55 breakout retest. And for my logic, this should go to close the gap. But you know, I don't know. The GBP is very, very nasty. It went to 61.50, then it dropped to 60.50, and then it's 61.50 again. I don't like how it behaves. I need to be honest. But the thing is, I'm in the trade. I have a stop loss, breakout retest trade. If it happens to be okay, of course I will close it. So my stop loss is at 61.20. Okay, if you take that, if you took the trade. But the thing is, 61.34, it's even better, because in case if you enter in 61.34, that was a trend, intraday trend trade. But the thing is, I was going for a breakout. And of course, this proves one more thing, what I was talking about last couple of webinars. Trend trades are generally safer than breakout trades, just because of these things. But still, well, we have our stop loss, we have, wow, let me close the trade. Now it's going up. This is what I like. Now I will put my, how we say it, trailing stop. No, 80. 80 is level which can be sold. So I close the trade. I close the trade, now giving me something around 27 pips. Okay. Now, Kalyan, this is not a webinar about my trading. Close for 30. Great. I closed for 27 pips. Great. I made this day. Actually, yeah, while I was talking about 61.55 breakout, the price went to 61.80. And don't forget that I was stating that 61.80 could be sold. Because of that, guys, I'm not sure if you want to trade still GBP. I'm not sure 61.80 can be sold into, right? You know what I was talking about if you listen to me, and you should listen to me because I know what I'm talking about. Please, always place a stop loss, and you see now it's 61.70. So 61.80 is protected. If you are in the trade, protect with trailing stop, close the trade. Okay, we made a slight digression, and of course I hope that Admiral Markets won't mind that I basically made a digression, but I know that many of you guys are, I like that, because you are visiting the webinars and you basically are listening to the truth itself. I don't have anything, and I don't like to lie, really. I'm not that kind of guy. And hate gap slippages, especially trading M1. Why it can happen on big events? Gaps are not caused by with our provider Admiral Markets law. Yes, gaps. I will talk about gaps. We will have a special webinar about gaps, and I'm not sure if I think it was scheduled, maybe not, but I will check it. Guys, about gaps, please pay special attention to that webinar. I will talk about gaps. It's because of liquidity providers, and it's because retail markets do have gaps. Forex is open 24/7. Retail market is open 24/5. And then when market opens with retail brokers, we have a gap. Okay, I will talk about that. So guys, thank you for listening to me again. Thank you for paying attention to. I'm watching the price now. Again, it was sold off 61.80. Thank you for your support, of course, and I will talk with you soon, guys. Thank you again for all of your comments. I will talk to you soon. Cheers, guys, and bye for now.